Fed Governor Michelle, we've decided Bowman, speaking early this morning at a symposium in Germany, she said the U.S. central bank should be prepared to continue lifting interest rates because inflation remains too high and the labor market is too tight. She said she wasn't confident that the Fed is making enough progress slowing down economic activity and inflation. We told you yesterday about similar comments from Richmond Fed President Thomas Barkin, but unlike Barkin, Michelle Bowman will have a vote at the June meeting, implying that Mr. Barkin will not. I don't know, she just doesn't think the Fed is being effective enough at slowing the economy. This just, when I hear things like that, it's...
Well, that's the unfortunate byproduct of this.
It's not a byproduct, it's all they got. And it's such a blunt force, negative consequences and unintended negative consequences of the tool should tell us all this is not the way, this is not an optimal way. Maybe it's the only way. I still, I always argue that the supply side is where you should be working, not the demand side. Killing demand, let's open up supply of all these things, energy, whatever we need, labor, get people to come, there's ways of easing inflation that don't entail getting people put out of work. Yeah, to 5%. Yeah, well, we're shooting for 5% unemployment. Do the math. So yeah,
they've never said that.
You 4,000, you 4 million people. I'm sorry. I'm sorry. Inflation is bad. You won't have any. Inflation won't be a problem for you, but you won't
afford the eggs that come down in price because you won't have a job.
You won't have a paycheck.
We'll worry about that later.
You won't have a paycheck, but inflation will be better. Joining us now, Greg Branch, managing partner at Veritas Financial Group, as well as a CNBC contributor. And Gunjan Banerji, lead writer for the Wall Street Journal's live markets coverage. She's also a CNBC contributor. Greg, you're up there. I'll be right with you, Gunjan. Just let me start with Greg. Sometimes I'm like the chorus or maybe the groundlings or something, like shouting things at I don't really mean all this, but you understand what I'm saying, don't you, Greg? Isn't there a better way to try to manage an economy than having all these different people willing to talk at any time, and we got to report on it breathlessly? I just wish the private sector could do what it wanted to do and not be so dependent on central bankers.
Well, I think you might have hit it on the head a few seconds ago, Joe. This might be the only way, given the way that we're structured. I'm sure that we would all love for the answer to come harmlessly from the supply side, but how do we increase the supply of labor without triggering the politicians? It's one of the things that our country will likely have to deal with because it reflects on our immigration policy. We need more workers. We simply don't have enough, and wage pressure will continue while that is the case.
And we can't pay people to stay home either, and that's another politically unpalatable thing as well, Greg. That's why we're in this kind of.
Right, and barring the extraordinary circumstances, certainly entitlements need to be addressed because they drive demand. And so I don't know if there is any safe lever to push here, but I do agree with what the Fed governor said. I think it's quite binary, actually. I think that the Fed should be prepared in the case that there is a quick and easy and painless resolution to the debt ceiling, what I'm going to call a debacle. But provided there's not, the Fed has done the right thing here. They've paused because the politicians will do their work for them.
How do you know they paused? They haven't paused. They raised by 25 basis points.
They did, and that was
they made it clear they haven't paused. They said, "What do you mean did we pause? We just raised by 25 basis points. What do you mean we paused?"
Well, I think their language was wait and see.
I know.
At least their language is different, right, Joe? It was more of a wait and see approach. We're going to be episodic, but at the end of the day, they should wait until this is resolved. My personal feeling is that this resolves only in one extraordinary measure or another. Either we are going, and I hate saying this, but we are going to default in some form or fashion. You see, they just postponed the meeting by a week, or the president is going to have to supersede Congress. I think either path leads to a downgrade of our debt.
Well, hopefully that's not true. Hey, Gunjan, we need another how many basis points given just what happened yesterday? Can I just say PacWest? So how many basis points have we already gotten implied from what's happened in the banks for the past month and a half? Add another 100 on, so why do they have to do anything?
Investors are expecting this bank crisis to lead to a tightening in credit conditions. And I think that's why a lot of people have started to price in that pause at the next meeting. What's fascinating is that despite these Fed comments that we saw overnight, by and large, a lot of investors seem to be looking past some of the recent inflation data. And we've seen that in terms of decreasing volatility after these CPI releases. The S&P 500 has moved around 0.6% after CPI this year. That's some of the lowest volatility we've seen since 2019, before inflation even came into the picture. So that tells you investors are expecting inflation to decline, kind of in sharp contrast to what we heard overnight from the Fed.
Yeah. When I said 100 basis points, you think that's about, what, 75, 50, 75? What do you think the credit contraction is good for that the Fed does not have to do?
I think that's the big question. I think the tough thing is that takes a long time to play out. It takes a while for these tightening credit conditions to ripple through the economy. So for all these investors, hoping that this would be a lightning fast kind of downturn and rebound, that's definitely not the case. And that's why this recession that everyone thought would come in the first 2 quarters of the year just hasn't come yet.